Okay. Okay, think I'm in live now, both in YouTube as well as on Facebook. Okay, so if you're in the room, can you please say hi to me? Today is very exciting. Today is a day whereby the inflation figure is out. I think we got the inflation figures already. I haven't seen the inflation figures yet, but apparently now the market is falling a bit. Okay, I'm looking at Dow Jones futures. As you can see, the last 5 minutes it has been quite volatile. Okay, so you can see that Dow Jones futures has fallen from 34,500, but of course it's now moving. Okay, maybe during the US hour session, maybe up. Okay, but it has fallen almost like 50, 60 points. Okay, so if you are in the room, can you please say hi to me? Hey, I can't see our Facebook live audience. Can my team member do something? I can't see the comment in Facebook live. So if you're in the room, please say hi to me. Today you are looking at the chart, okay, and you are looking at US market now. I'm showing you Dow Jones futures. So today there's a big event. In fact, inflation figure is out. European Central Bank, ECB is deciding on the monetary policy. Later we shall take a look. How is it? Okay. But if you're in the room, can you please say hi to me? Someone do me a favor. My Facebook is not live now. Okay, hold on a while. If you're in the room, please say hi to me. Let me know you're here. Okay, so what I'm going to do is I'm going to take a look at our inflation figure, which is the most important event I would say for the entire month. Okay, and if some of you know, last month there was a crash, okay, in both Taiwan Composite as well as crypto. Okay, crypto, some of you know crypto. Okay, the big dot, okay, has crashed, okay, almost 50%, and a lot of cryptocurrency, okay, all the so-called the digital coins have fallen, and a lot of them have fallen by more than 50. Okay, so one of the major reasons is because people are afraid of inflation, and we are already in the midst of inflation. So a lot of people are afraid that interest rate will rise. So later we shall take a look how is it. Okay, sorry that I can't see your comments. Okay, our team is trying to do something about it. I can see that there are almost like 381 of you. Okay. Okay, let me take a look. Okay. Okay, let my team fix. Okay, how is the situation? Okay. So let us take a look at the inflation figures. I think it's out at 8:30. So I'm going to go to this forexfactory.com. Let us take a look. Okay, the latest inflation figures. Okay, at 8:30. So just now at 8:30 p.m. Singapore time, the inflation figure is out here. Okay, so what happened is, as you can see, this month, okay, this month the inflation figure is 0.7%. Okay, 0.7%, and analysts predict that inflation will increase by 0.5%. So it's above expectation. Okay, later I'm going to talk about this figure and what's the significance. Okay, people are now afraid that interest rate is going up, as well as cutting, maybe there may be a slowing down by the central bank in printing money. Okay, so I guess, okay, over the next few months continuously there'll be such a fear. Okay, that's the reason why I think there might be some correction. Okay, so if you're in the game, you're playing stocks, you need to be a bit worried about this figure. Okay, so what happened is, last month we have an inflation figure of 0.8%, which is the highest in the last 11 years. Okay, so people are now afraid that this inflation is going up. Okay, let me take a look. Okay, my mouse is not working, sorry for it. Okay, yeah, let us take a look. Okay, the recent inflation figure is out. I just want to point out to you, last month, okay, let us take a look. Last month, what happened? Huh? Okay. Sorry, I can't see your comments. Okay, so I'm now just talking about whatever appears in my screen. Okay, so this is this month inflation figures. You can see just now at 8:30, the news is out. The CPI, or what we call the consumer producing the consumer CPI, consumer product index, okay, has increased by 0.7%. Okay, and the yellow color region is what we call the expectation. So the expected amount is 0.5%. So it's 0.2% above expectation. Okay, but more importantly, what happened in May? The inflation figure hit a 12 years high of around 0.8%. So last month, the projection is that our inflation figure, it may be at 0.3. So we are almost 0.5% above expectation. Okay, this rise of inflation figures is mainly because the economy is getting better. Okay, so it's actually a good figure. Okay, we are getting out of our recession. People are spending. Okay, but that's the thing. Going forward in the next few months, what I expect is good news in the economy will be bad news for stock market. Okay, so remember, in the next few months, if you see any good news in the economy, will be bad news in the stock market. Okay, so an inflation figure that is high means people are spending. If people are spending, it means the government may not want to print money anymore. So there might be an urgency rise in interest rate, which today Wall Street do not want it to happen. Okay, Wall Street want economy to be bad. They want COVID to be around. They want economy to still be stagnant. That's when the government will bring enormous sum of money, trillions and trillions and trillions of dollars. Okay, so if people are spending, economy is back up, there's no need to print money. Okay, and that's the reason why you can see a lot of products have been falling over the last 1 month. Whether it be the tech stocks, the crypto world, as well as some stock index like Taiwan Composite. Okay, so how is it now? Can I see some of the comments in Facebook? Still cannot. Okay, never mind about it. Okay, so sorry that I cannot communicate with all of you. Okay, we are trying to fix the problem. Okay, this is what tech is bringing us today. Okay, so welcome. By the way, welcome to our stock seminar. Today, my main topic, of course, today it won't be that long. Our discussion may be around 30 minutes to 45 minutes. I want to brief you going forward in the next few months or in the next few weeks. What is the thing that is of concern? Okay, Wall Street, what are they looking at? Will there be a major correction? Okay, so my take is that might be. That's why you need to be concerned with some economic figures. Okay, so the two most important stock news in Wall Street this week, and both of these news happened today on the Thursday night. Okay, so today this is our major discussion. Okay, so if some of you are in the game, let me brief you what is the index in America like. Okay, over the last 1 month, you can see a lot of major index has been very slow. In fact, the volatility has been really low. Okay, so this is an index called Dow Jones. Okay, Dow Jones Industrial Average. That is yesterday it closes at 34,447. Okay, but let me point out to you what happened 1 month ago. Okay, 1 month ago, when the inflation figure came out, okay, it shocked the world because it's the highest in the last 12 years. Okay, an inflation figure of around 0.8% month on month. Okay, so what happened is it reached an all-time high that day of 35,000, following which 2 days it went down. It went down to as low as 33,500. Okay, so from last month, 34,756. Okay, although 2 days it went down, but very fast the market bounced back up. So over the last 1 month, what happened? The index did not move as much. So it dropped only like $300, okay, 300 points, okay, for Dow Jones. So the movement is really very slow. A lot of sectors, a lot of stocks did not move, okay, over the last 1 month. So this is in US, Dow Jones Industrial Average. This is S&P 500 Index. So S&P 500 Index, last month, before the inflation figure came out, it was still lying at around 4,190 points. And today, the S&P 500 yesterday closed at around 4,220 points. So a rise of 30 points in the last 1 month. And that's the reason why US market has been very slow. Dow Jones is not moving. Nasdaq is not moving much. S&P 500 is not moving that much. Okay. What about local index, local stock market? So this is Singapore Straits Times Index, STI. STI 1 month ago, it was lying at around 3,180 points. Okay, before the inflation figure come out. And today, okay, today it is hovering somewhere around 3,150 points. So a mere drop of around 30 points. So you can see even Singapore local market, it hasn't been that good. Okay, so if some of you have been playing Singapore stocks, you might know the last 1 month is pretty slow. Okay, so it hasn't been moving. So if you are in the Singapore market, okay, if you are in the Singapore market, you may find that some stocks are really stagnant, okay, are really stagnant. DBS has been lying at $30, is still lying at around $29 to $30 today, okay. So let us take a look at the fluctuation index, or what we call the volatility index. Some of you know this is what we call the fear index, okay, the fear index. Okay, this is the fear index of the world. Okay, basically, people view it as the inverse proportion, okay, to the stock index. So when the stock index go up, the fear index will go down. Okay, so that's the reason why this fear index, or what we call the volatility index, is a measure between the number of contracts, okay, that buy put option against the number of contract that buy call options. Okay, so this volatility index has been dropping ever since last year March. Crazily, it has dropped from $85 to today $17. Okay, the VIX has been dropping crazily, and that's the reason why you are looking at S&P 500 index going up to all-time high figure. Okay, finally, sorry for the wait. Okay, finally the comment is up. Okay, let me take a look. How many people are in the room now? Sorry, I can't see the comment. How? No, it's not moving. It's not moving. Okay. Okay, someone fix the comment for me. Okay, I can't even converse with you. Okay, so what happened is the fear index has been falling down. Can you get me just another computer? I just want to see the comments so that I know who are in the room. Okay. Okay, so what happened is you can see that this fear index has been falling. It has reached almost a 1 year low point. Okay, a 1 year low point of $17. Okay, why? Because S&P is hovering at the high point. So when the stock is going up, the fear index has been falling. My take for you is going forward in the next few weeks, you may want to do a bet that this index will go up in the next few weeks. I foresee that there might be some correction in the stock market, and that's the reason why this VIX might start to spike up. Okay, so one of the way to play this VIX is number one, to buy the ETF. If some of you know some of the ETF of VIX, okay, or number two, you can buy perhaps a speculative call, okay, an option on VIX. Okay, so these are some of the ways to play to bet that the fear will be going up soon. Okay, so I just want to point out that volatility has dropped to a low point, and that means the stock market has not been moving that much. There's almost not much volatility. It has reached the lowest point over the last 1 year. Okay, so what's the reason why there is almost no direction in the stock market over the last 1 month? ever since the inflation figure that came out in April, okay? So there are two most critical market fears now that Wall Street is paying attention to, okay? So if you know, okay, there's still no comments, is it? Huh? This is the comment. Okay. Oh, by the way, okay. This is a comment, okay. Yeah. By the way, now that I can see you, okay. Can you please list down, okay, at the right hand side, there is always what we call the comment box, okay. The Wall Street is now fearing two big news, okay. Can anybody comment in the comment box what are the fears of Wall Street today? There are two big fears of Wall Street, okay. So let me have some participation, okay. Now that I can see you already, okay. Thank you. Okay, there's somebody by the name of Pai Chung Kok, okay, says that stagflation will it be coming? Hey, stagflation will it be coming? Okay. By the way, can you drop down in the comment box? I would like to converse with you. Can you list now what are the two main fears of Wall Street today? What are the two main fears of Wall Street today? Okay, which I want you to pay attention to in the next few months. It's going to impact the stock market. Okay. So can you please list down two of the main fears of Wall Street today? I still cannot see the comment. Something wrong. Okay, I can only see the last comment is by Chok Kok. Okay, he's talking about stagflation. Okay, never mind about comment on Facebook. Let me go to YouTube now. Okay, so if some of you are in YouTube, I can see. Okay, Vincent Lim said jobless rate and inflation. Xiang Chiu Chai said interest rate. Thank you so much. Adrian said interest rate and jobless. Okay. Something is wrong with Facebook today. Okay, I don't know what happened. Okay, but never mind. Okay, so at least I can see some of the comments in Facebook. Some of you said interest rate. Some of you said inflation. Some of you said tapering. Correct. Okay, you got the main point. Okay, these will be the two main things that Wall Street will be concerned of over the next few months. Can you please write down? Okay, or take note. Number one is the rise of interest rate. Number two is the slowdown of printing of money. So basically why? Because ever since last year 20th of March, US has stimulated the economy by doing three things. Okay? Number one, they have decreased interest rate to 0%. Okay? So if some of you know, one of the way a government can stimulate a badly hit economy, a recession, is to decrease interest rate so as to stimulate borrowing. People will borrow, go and buy house, go and buy cars, go and buy whatever, okay? So one of the way is to decrease interest rate, which ever since the COVID starts, US has been doing. And all over the world, the government has been decreasing interest rate. A lot of central banks, even Singapore, has decreased interest rate to a low point, okay? So that's the first way that during COVID, US has been doing to stimulate the economy. The second way is that they have printed trillions and trillions dollars of money, okay, through two stimulus packages, okay, two ways. One is called monetary policy, okay, the other is called fiscal policy, right? Okay, one is monetary policy, the other is fiscal policy, okay. So that's the second way that US has been stimulating the economy or even the stock market, okay? So basically monetary policy means they try to lend as much money to its own banks so that the banks can lend money out to the public or businesses to stimulate the economy. That is what we call monetary policy. The second way is to help its own citizens by cutting down taxes or even give them free money. Okay, so one of the way for fiscal policy is to cut down the taxes. Okay, so US has been doing that. Okay, so let me give you a glimpse of how much money US has been printing over the last 1 year. How many of you in the audience can guess how much money has US printed? Okay, can you just give me a rough figure? Okay, let me see whether you got it right. Okay, so how much money has US printed over the last 1 year? Can you just put down a figure? Okay, let me see whether you got it right. Okay, over the last 1 year. Okay, let me go to the website. Okay, keep the comments running. US has printed a lot of money. Okay, but how much money has been printed over the last 1 year? $10 trillion. Mark Ng said $10 trillion. Shugi Yo, okay, in YouTube said $10 trillion. Thank you so much. Thank you. Okay, Vincent said $15 trillion. Okay. Okay, let me show you a website called investopedia.com. If you go to this website, you just type in the monetary policy or the printing of money, it will show a lot of packages, okay? Enormous sum of money, okay? So there are basically two stimulus package that is being pushed by the central bank in US, okay? One is called the fiscal program, okay? As you can see here, there are many fiscal programs ever since the COVID starts. They have American Rescue Plan. They call it America Rescue Americans. Okay, they call it the what we call the Paycheck Protection Program and the Healthcare Enhancement Act. They have also the CARES Act. Okay, and also the Family First Coronavirus Response Act. So all these are programs that was kick-started ever since the COVID, okay? So let us take a look at some of the rescue plan or stimulus package, okay? The first is this America rescue plan that was started in December 2020. They spent around $900 billion, okay? $900 billion of stimulus package, okay? Then this is Paycheck Protection Program that they started in April 24th, okay? 484 billion relief bill, okay? There's also the major CARES Act, which is on that kickstart on the 23rd of March last year. 23rd of March last year, they agreed to print around $2 trillion stimulus bills, okay? So you can add the sum up, okay? And there's also Family First Coronavirus Response Act, okay? That also costs around trillions of dollars, okay? So basically, if you add all the fiscal program up, it came up to a sum of around $7 trillion, okay? The fiscal program is the program that is trying to help citizens, either by cutting tax or giving them free money for the homeless people, for those who are sick or whatsoever, okay? So to help the sick, the needy, the unemployed staff, give them subsidy in insurance. Basically, fiscal stimulus means to help the citizens of US, okay? But there is also something called the monetary policy. Okay, let us take a look, okay? So, monetary policy, it means the government is printing money to give the banks as a loan to people who want to buy house, as a loan to people, businesses who want money for their businesses. That's called monetary policy, okay? So, let me share with you. For monetary policy, you can't even put a number to it. That's the reason why nobody in the world knows how much US has printed. Why? Because sometimes they have this thing called the lending program, whereby they print around $600 billion and they lend out to the bank to lend to businesses. But 3 months later, you need to pay back the money. then they will take the $600 billion and recycle the loan again to lend out for another 3 months, get the interest, get the principal. 3 months later, you give back again, they recycle the loan again. So, to tell you the truth, up until today, no one can tell me how much really US has printed the money. Because some are big stimulus package, like the fiscal stimulus package, you can put a number to it. Some are monetary policy, whereby they recycle the loan again and again and again, and this brings liquidity to the stock market, this brings liquidity to the loans, okay? So you can't say it's $600 billion, because you recycle one time, $600 billion, you take back the money, recycle again, $600 billion, you recycle again. It may be multiples, okay? It may be multiples of $600 billion, okay? So in essence, US has in total, over the last 1 year, printed almost, I would say, easily more than $10 trillion, more than $10 trillion, plus the recycle program, as well as the big fiscal stimulus package, okay? And that is the reason why, wow, okay, US has rebounded, okay, ever since the inflation figures, okay, not bad, okay? So that's the reason why almost all major index has increased in value over the last 1 year, okay? Be it the stock market, you can see Dow Jones is sitting near its all-time high. Now it's at around 34,000. From as low as 18K, it has increased almost 90% its value. 90% for Dow Jones. If you think this is a good return, can you give me a good sign? Okay, can you give me a good sign? Lim Kai said $30 trillion. Honestly, no one knows how much is printed. No one, okay? Because some are recycled program, okay? Tan Tai Kiang say no sound, okay? So I don't know about some technical issues, okay? Maybe you want to increase the sound so that you can hear me out, okay? So what happened is all over the world, because of this stimulus package, all the assets have been running crazily, okay? All the assets, including commodities. Okay, stock market has doubled up. A lot of stock market in the world has doubled up, okay? Taiwan Composite has doubled up. SDI has gone up almost 50% its value. Okay, Dow Jones has doubled up. S&P 500 has gone up almost 90% its value. From almost 2002, today is 4003. Almost 4002, 4003, okay? So, even crude oil, if some of you know, crude oil has reached $70. Can you imagine if you buy crude oil when it reached the lowest point at $6.50? Today you are 10 times richer. This index run better than some crypto, okay? So 10 times your money, okay? $6.50 to $70 today, okay? In the span of 1 year. In the span of 1 year. And that's energy product. Heating oil from 60 cents today is $2.10. It has gone up almost 300%. Sorry, how many percent? Yeah, 300, more than 3 times return. Okay, more than 3 times return. Okay. So a lot of things has gone up. Agriculture. Yesterday I take a look at corn price. Okay, corn price has been crazy. Okay, $300 last year April. It has gone up to $700 today. Soya bean has gone up, okay, from $800 today is double up to almost $1,006, okay? So not including all the so-called the crypto world, okay, a lot of coins over the last 1 year has gone up many times, okay? Tesla has gone up almost 10 times its value. Some of stocks has been crazy, okay? Growth technology stocks has been crazy, although Tesla has dropped from 900 back to 600, but from last year April or March, from $60 today is still a $600 stock, 10 times return, okay? So what is fueling such a big rise in all kinds of assets in the world? One of the reasons is because of the stimulus package. Okay, that's the reason why the Wall Street is now fearing, what if inflation figures are good? Okay, what if the government don't bring money anymore? Okay, so everything might stop. Okay, so of course the third policy that US did is to decrease US dollars. So these are the three main policy ever since COVID that US has kickstarted. Number one, decrease interest rate. Number two, to print a lot of money in the form of fiscal packages as well as monetary policy. Okay. Number three is to decrease US dollars. Okay. And this three policy has worked marvelously, right? Over the last 1 year, it has worked tremendously. Okay. So the only thing that US Wall Street is not fearing today is US dollars. US dollars, why they don't fear? Is because US dollar has gone down to 1 year low point. From a high price of $104 today is at 90 bucks. It has not increased. But if this guy is increasing, then Wall Street might be a concern. Okay, but now at least it stay low. Okay, it stay low. Okay, so these are the two main fears of Wall Street. Number one, a rise of interest rate. Okay, after almost 1 year of low interest rate, if in the next few months there's a chance it will rise in interest rate, people will fear that this liquidity will stop. Number two, Federal Reserve stop or slow down in printing of money. That is what is causing the fear of the stock market. That's why it's not moving. So why interest rate will rise? Okay, one big fact just now some of you have already pointed out is because of inflation figures. Okay, inflation figures. Okay, that's the reason why you need to pay attention to inflation figures over the next few months. Okay, so what are some of the ways whereby you can measure inflation figures? Okay, take note of these two things. Okay, okay. Number one is what we call the CPI index, the Consumer Price Index, and number two is the PPI index, the Producer Price Index. Okay, the Producer Price Index. These are the two main things that's going to measure inflation figures. Okay, of course today there's a CPI index that came out. Okay, luckily I think the market is quite reacted quite well to the recent inflation figures that came out. Okay, so just now it came out at around 8:30. Okay, later we'll take a look. Okay, but there is something called the Producer Price Index. Okay, so and my gut feeling tells me that the Producer Price Index will shoot up very strongly somewhere after September. So this inflation worries is not over yet. Throughout the next 6 months, it will keep on continuously be a very strong or big Wall Street topic. Okay, so let's take a look. Okay, what is Consumer Price Index and what is Producer Price Index? Okay, so one good website that some of you may fall upon, okay, is this website called theforexfactory.com. Okay, whereby it tells you what are the so-called the important economical report that come out in US as well as some other countries. Okay, so let's take a look at US economical reports. Okay, so basically in US every month there are around 60 reports. Some reports focuses on retail sentiments, some focuses on unemployment figures, some focus on inflation figures, some focus on retail sales or even inventories, okay? So and so forth, a lot of reports, okay? But now people are worried about the the CPI as well as the PPI, okay? So let's take a look, okay? This is the CPI index, okay? So CPI index always come out on the second week of every month, on Thursday. Okay, that's a CPI figure. Okay, so basically CPI figure, they try to measure some of the products that people buy, consumer are purchasing, and whether this product is rising in terms of price by how many percent. That's what we call the Consumer Price Index. What kind of products do they measure? I really don't care. Okay, so basically the government is measuring a lot of products in US, okay, and they have a basket of products that they measure, and every month they will come out with this figure. What is the price increase of all these products? Okay, if you want to take a look, okay, you can always do a search. Okay, what are the things that they measure? Okay, but you can see. Let us take a look at the historical chart. Okay, historical chart of CPI. Okay, as you can see, this is the CPI historical figure over the last 10 years. Okay. Oops. Okay, let me get the mouse right. Okay, I want you to see this figure over the last 10 years. Okay. Okay. What is worrying Wall Street is that there hasn't been such a high CPI figure ever since 2008. As you can see, 2008, before Lehman Brothers collapse, okay, the economy is growing very strongly. Okay, so you can see a bunch of CPI figure whereby the CPI prices are rising more than 0%. That means they are inflating. Okay, the consumer prices are inflating every month. Okay, so you can see all this bunch of high bars, right? Okay, whereby it's above 0%, and even 1 month reach around 1%. Okay, so that means month on month it increases by 1%. Okay, normally this is a time whereby economy is getting better and is very so-called it's growing very strongly. That's when inflation figure is rising very strongly. Okay, even in 2009, after Lehman Brothers collapse, you can see the inflation figure did not go up too much, right? So it's kept somewhere below 0.5%, okay, for all these months, okay? But now what happened is, after, in the last 3 months, the inflation figure hit above 0.5%. And last month, it went up to as high as 0.8% now, okay? Which is the highest over the last 12 years, ever since 2009, okay, ever since the market crash, okay? And this is what worries Wall Street today. If this figure keep on rising, if it rises to more than 1%, there's a very likelihood chance that US government need to do something to control these inflation figures, because they don't want hyperinflation. When there's hyperinflation, there's going to be some big trouble if you don't control this, okay? So that's the reason why people are afraid. Now at 0.8, today is 0.7, right? If in the next few months, especially, I want you to pay attention, especially when there is end of the year holiday season, right? When there is Thanksgiving, Christmas, or even New Year, will this thing shoot above 1%? If it shoot above 1%, it's time for concern. Okay, it's time for concern. Okay, they may try to rise interest rate, and that's what worries Wall Street today. Okay, so this is what we call the CPI index. What about the PPI index? Okay, PPI index currently is not of worry to Wall Street yet. PPI index always happen on the Thursday, on the third week Thursday of every month, 1 week after the CPI. Okay, so you can see. Sorry, it's not on Thursday. Sorry, it can be sometimes Tuesday, sometimes it may be Thursday. Okay, so next week Tuesday there's a PPI index. Okay, let me show you the PPI index now. Okay, PPI index has been rising, but at least in comparison over the last 10 years, it did not went up too much. Okay, it has not gone up too much. Okay, so you can see it's kept somewhere around, yes, 1%, but at least in 2012 it rises to as high as even 1.8%, right? Sometimes it rises in 2011 to around 1.8%. Okay, so it hasn't risen to the peak yet. Okay, but I want you to take note. My prediction is in the coming months, given the shortage in logistics, some of you know, what we call semiconductor chips is now in very strong shortage. Intel CEO has told us that this shortage is going to last until next year. Okay, I foresee the raw material of all these products whereby the producer need to buy. Okay, so basically PPI means the government is measuring some of the raw material that company buys. Is the prices increasing? How many percent increase every month? Okay, that's what we call the producer price index. Okay, the PPI figures. Okay, my take is by the end of the year, most likely this figure is going to rise very strongly. Okay, very strongly. Okay, given the crude oil price today, the energy product price has rise crazily, the agricultural prices has rise very crazily, same as some of the things like semiconductor chips and so forth. Okay, because of all this lockdown, because of COVID, because of the shipment problem, the logistic problem, my guess is this thing will become worse and worse, even much more than I would say the CPI index. People are worrying about CPI index. They are not paying attention to PPI index. Okay, but in the next few months, you must pay attention to this thing. So these inflation figures, I would say in the next few months, it won't be gone. It won't be gone. Okay, and in the third quarter, it might be even worse. Okay, it might be even worse. Okay. Okay. And let me tell you what happened last month. When the CPI index shocked the world, it causes some market to crash. Okay, if some of you know, this is a Taiwan stock market. If you read the news, on the day the CPI released the figure, it was May the 12th. Okay, May 12th. Okay, the second week of every month. May 12th, they released the figure. What happened? Taiwan that day, the stock market crashed. If some of you know, the stock market crashed. Okay, as retail investors are wiped out because of margin calls. Okay, so Taiwan in one day it suffered one of the greatest crash in the last 20 years. One day crash in Taiwan index. Okay, it caused a lot of retailers to get margin call. Some of them are forced to liquidate their position. The broker don't allow them. Okay, they got margin call. They were forced to sell away their stocks. Okay, and that's the reason why that day, this is the one day crash. Okay, that day from 16,500. This is the Taiwan composite, right? From 16,500, it dropped to almost 15,200, 300 points. One day it dropped 20%. One day it dropped almost 20%. Okay. In fact, that week alone, it dropped from 17,000 to almost 15,000 points. A drop of around 2,000 points, which is like a 10%, almost like a 2,000 points, almost a 15% drop in the span of 3 days. That's why a lot of people got margin call. Okay, but luckily what happened is Taiwan stock market revived back. Okay, now it's back to around 17,000 points. Okay, but this shows that even Taiwan also pay attention to inflation figures. Okay, so at the time there was this inflation problem and it caused a crash in this market. Okay, then what about another in assets crash? Okay, some of you know. Okay, this is last month 10 of May, 11th of May, 12th of May. When the inflation figure come out, the CPI index came out, this index called beat ... Okay, it crashes. And a lot of cryptocurrency crash. Okay, sorry that I cannot mention the word, okay, the whole word. Why? Because now Facebook actually banned this word. Okay, so if I announce it, okay, what they will do is they will cut this video. Okay, so in fact, over the last 3 months, I commented a lot on this currency. Okay, on this index, then all my articles were gone. Okay, so I hate Facebook because of that. Okay, so if some of you know, okay, I actually commented this thing might even drop to as low as in the next few months. Okay, as low as even sometimes it may drop to even 20K. Okay, so I did comment it when it was at around 50,000, 60,000. Okay, and indeed it did crash. It did crash, and a lot of crypto, some of the different coins all dropped, right? Okay. So ever since the release of the inflation figures, it dropped from 60,000 by almost like 50%. It went to as low as 30,000 point, okay? But at least now there is some support. Over the last few days, you can see that there's some support somewhere around the half figure, so around 30,000 point, okay? But it does not mean that this support in the next few months, it won't be broken, okay? At least it found some support here, okay? So you can see there are some markets, because of this inflation figure, it crashed, okay? So I want you to pay attention to, in the next few months, some of the inflation figures coming out, especially the PPI index, okay? Okay, let me take a look. Okay, some of your comments. Okay. By the way, if you have any comments, okay, you can always feel free to comment in Facebook or in YouTube, okay, in the comment box. Okay, let me try to answer your questions. Okay. Okay, by the way, before I go on to talk about the stock market as well as some stocks to recommend you to watch out for in the next few months, okay, so I'm going to do this for you, okay. So if some of you want this stuff, digital report, I came out with this digital report a few weeks back, okay, whereby I did a lot of study on infrastructure stocks. In US, some infrastructure stocks in the last few weeks has been running crazily, okay. So I did tremendous research. So if you want to know what are the top 3 US infrastructure stocks that's going to benefit from this stimulus package, is some of you know Joe Biden has released a stimulus package that is going to cost them trillions of dollars. It's going to benefit in the next few years some of infrastructure stocks, okay, like steel making companies, okay, road manufacturers, okay, some of stocks has been going up crazily, okay. So I've done tremendous research. I don't mean you buy the stocks now. Make sure you buy only upon correction, okay. So if you want to know this digital report, I'm going to give it to you free. But I want you to do a few things for me, okay? Okay, so if you want this digital report free, okay, can you do me a favor, okay? Do these 4 steps, okay? Do these 4 steps, okay? Number 1, all you need to do is like our page, okay? Like our page in Daniel Low Investment Group, okay? Like our page, that's number 1. Number 2, like and share this video as a public post, okay? So please share this video to your friends. And number 3, tag as many friends as possible and comment the word shared, okay? So if you are looking at YouTube, just comment the word shared in YouTube. If not, you are looking at Facebook, comment in Facebook page. You have shared this post, okay? So once you do these 4 stuff, we are going to send you the digital report in the next 1 week, okay? So I will be, my colleague, okay, is going to compile those who have done this. We are going to send you digital report, okay? So there are a lot of stocks has been running crazily. So if some of you know a stock like Alcoa, okay, AA. Okay. So ever since Joe Biden announced that there might be some infrastructure project, steel making companies, manufacturers has been running crazily, okay? From $20, it has increased almost double its figure to $40. So in the last few months, tech stock has been dropping crazily, but steel making companies has been rising. Why? Because of the stimulus package, okay? Of course, I don't mean you buy Alcoa today, okay? I predict that there might be some correction. So upon correction, you need to know where is the support to buy this stock at, okay? So in this digital report, I'm going to give you 3 recommendations, okay, to know what are the good US infrastructure stocks to look at over the next few months, okay? So if you like this, do these 4 things, okay? Number 1, like our page in Daniel Low Investment Group. Number 2, share this video as a public post, tag as many friends as possible. Number 4, share this post, okay? Okay, good. Okay, the second thing that people are paying attention to is the slowdown in printing of money. So in the next few months, my guess is if these inflation figures get worse and worse, there might be some slowdown in the printing of money, both in Europe as well as in US. Okay, so you might want to pay attention to it. Okay, so today European Central Bank at the time of 8:30 p.m. Okay, so they will announce how much bonds they are likely to purchase. Okay, so the consensus figure is that they are going to purchase around $80.7 billion. I've not looked at the actual result now, but in the next few months, if there's some lowering down in the purchase of bonds, it might mean that there's a slowdown in the central bank in printing money. So I want you to pay attention to this figure over the next few months, okay? So over the next few months, this is my take for you, okay? I feel that we have reached what we call a saturation point in the stock market. As you can see, the stock market has been running for almost 1 year and 3 months. Ever since 2002, it has risen to almost 4,200 for S&P 500 index. Okay, the resistance that I predict this index is going to, okay, in the next few months, the resistance will be somewhere around 4,002 to 4,300 point. Okay, and we are almost in the midst of this resistance. I predict in the next few months, there might be some big correction coming out, okay? So if you want to know why, what's the reason, there might be some resistance around this area. Can you give me a one sign, okay? In the comment box, can you give me a one sign so that I can tell you what is the secret to the resistance point over the next few months, okay? Just give me a one sign. I'm going to tell you why this figure is pretty important, and I don't feel it's going to break anytime soon 4,300 point. There's going to be some major correction coming out soon, okay? So just give me a one sign. I'm going to tell you why there is some resistance around this point, okay? Just give me as many ones as possible. Thank you, Sugi. Thank you, David. Thank you, Vincent. Thank you, Wally. Thank you, Christine, okay? Thank you for your ones. Thank you, okay? Till now, I still cannot see the comment in Facebook. Sorry for Facebook audience, okay? I cannot see your comments. Today, Facebook is having big trouble, okay? Okay, some of the ones, yes. Okay, in Facebook, I can see your comments now, okay? Thank you, okay? Thank you for your ones. Can you write down, this is what I call the double up rule. Okay? Anytime an index, once it reaches the double up point, there's going to be some major resistance, okay? So all you need to do is take the lowest point. If the lowest point is around 2002, you double it up, it will be around 4,004. So in the next few months, if S&P 500 reach around here, 4,004, there might be a crash. There might be some big correction coming out, okay? This is not a bear market crash, but there's bound to be some correction, okay? But having said that, don't wait for this index to reach 4,004 before you sell, okay? My take is around 100 to 200 points away from 4,004. You need to sell away or at least take some profit off the table. It's not going to go too much up anymore. There will be a limit that it will go up, okay? So there might be some correction coming up soon, okay? Let me share with you what happened in 2008, okay? Okay, let me show you this chart here. This shows what happened during our last bull market rise ever since the Lehman Brothers collapse. Okay, can you see S&P 500 is lying at around 665. Now I can see already. Okay, You should have given me the... Okay, because my laptop is not working, I cannot see your comments. Now I use a handphone, I can see your comments. Thank you so much. Okay, thank you, Eddie, for your ones. Okay, so you have any questions, you can always drop in the comment box. Okay. Samuel said infrastructure stimulus not approved yet, and the Republicans have objections to the package. Will it get approval? Okay, I would say that the Democrat Party need to do a lot of things. Okay, they need to fight in the Congress to get the stimulus package to be out. Okay, so if the stimulus package is out, definitely it will be a boon. Okay, so definitely it will benefit. Okay, infrastructure stocks. Okay, so pay attention to the stimulus package. Of course, there's some rejection. Republican Party say they don't want to print $2.3 trillion and they suggest around $900 billion. There's always some fight in the Congress. So this is the thing I want you to take note. Why I say in the next few months there might be some major correction. This ongoing fight that is now in the Congress is going to stop. It's going to stop, okay, the Democrat Party from releasing more stimulus package in the next few months. So even though the Democrat Party, the Joe Biden administration want to print a lot of money, right? They still want to print trillions of dollars, whether to help the infrastructure or whether is it fiscal policy or whatsoever. Okay, they still want to print a lot of money, but they are going to face tremendous pressure. And this pressure is going to stop or slow down the stock market from going up. So Wall Street is of concern now, not only in the stop or the slowdown of printing of money, but as well as the inflation figure and the rise of interest rate. Okay, all this will create tremendous pressure ongoing, and it will happen in the next few months. Okay, but anyway, forget about that first. I just want to tell you about the double up rule. If you take 665 points, can you please do me a favor? Use your calculator to calculate. You multiply by 2. Can you please tell me what number you get? Wally in YouTube asks, hi Daniel teacher, when talking about the 7 economic pillars of US, which pillar should we keep our eye on this year? Okay, Wally asked a very, very important question. Okay, but give me a figure first. Let me later answer Wally questions in YouTube. Okay, okay, so 665 times 2, can you give me a figure? Okay, do your own due diligence. What is the figure you get? Thank you, YS Yap, YS Up, Capri, 13101330. Thank you so much. Around 1,300, am I right? Somewhere around 1,300, 1,310, 1,330, okay? This is the figure you need to be worried about. When an index multiply by 2, around 1,330 points, no matter how much it go above 1,330, sell your stock first. Why? Because this index has a chance of crashing down. Can you imagine an index like S&P 500 from 1,003, it dropped to 1,001? That is a drop of around 230 points in the index. 230 points, if you divide it by the index price of 1,003, that is at least a 15 to 20% collapse in the price of this index. Am I right? 330 divided by 1,003. Yeah, you get around 15 to 20% collapse in the index. That means your stock has a chance of dropping more than the index. Your stock has a chance of declining by around 20 to 30%. It's better for you to sell when it reaches the double up point, wait for the crash to come, wait for the drop, the correction to come, before you buy. Before you buy. Because you may be able to buy your Apple at 20% discount. You may be able to buy your Netflix at 20-30% discount. You may be able to buy your Alcoa, the steelmaking company, at 20-30% discount. Okay, that is what we call the double up rule. And this double up rule always happen in US, always. Okay, let me show you Nasdaq Composite. Okay, I'm going to show you a chart of Nasdaq Composite over the last 20 years or 30 years perhaps, okay? Okay, the stock market has just opened. Okay, US stock market always open at 9:30. Okay, let me show you what happened in US. Okay, in 2009, okay? Let's get back to 2009, okay? If I'm a long-term investor, should I sell my stocks now? Okay, that is a troublesome question, okay? If you're a long-term investor, of course, it really depends on how many years do you want to hold on to your stock. Can you stomach a 30% decline over the next few months? If you can, by all means, you can hold on to your stock because the stock market is going to go back up to all-time high again, right? So we are in the midst of correction, but it does not mean it won't recover. This is not a bear market crash. So never mind about that. Let me just focus on 2009. I'm going to tell you what happened, okay? So this is Nasdaq Composite from as low a point of 1,000 points. If you multiply by 2, right, you get a figure of how much? 2,000, right? The moment it hits 2,000, no matter how much you go above 2,000, forget about it, okay? Sell your stocks. I would say if you're a short-term investor, you need to do some profit taking. If you're a long-term investor, it depends on whether you want to do some profit taking. I would suggest you to at least sell half your shares, okay? Half your shares, okay? Because from 2,000, it's going to drop to around 1,700. A 300-point drop in the span of 1 month. From April to May, it dropped 300 points, which is exactly a 15% decline in the index. Your stock can drop easily 20 to 30%. That is what we call the double up rule. It has happened again and again and again, every time after a bull market run. So you can see this is 2002 after internet bubble burst. Nasdaq Composite from $800, it multiplied by 2 is 1,006. It reached an all-time high figure, not all-time high, but a high of around 1,550. So I would say don't wait for it to reach 1,006 before you sell. Sometimes before it, okay, before this figure, at least profit take some, okay, 50 point, at least profit take some. Leave the rest of the 5% to some risky investors, okay? So 1,550, it dropped to 1,003, a 250-point drop in the span of around half a year, right? Your index drop almost like 15%, your stock can drop easily, 20 to 30%, right? So what I want to share with you is all the major index in America over the last 1 year has almost doubled up. S&P from 2002 today is 4,002. Yes, it may go up to 4,004 before the big crash comes, right? But we are not far away from that figure. So at least give yourself a buffer of 100 to 150 points. Before it reaches that figure, I would say try to sell first. Okay, try to profit take some. If you are making some money off banking shares, sell at least half of your portfolio. Wait for the big correction to come. Wait for the 20 to 30% drop before you buy in. Okay? So not only S&P 500, let's look at Nasdaq Composite. Okay? There's a reason why over the last half a year, technology stocks has not been running and some even crashed almost 50%. Okay? Because Nasdaq Composite, it reached the lowest point last year at 7,000. Okay? 7,000 multiplied by 2. Can you give me the figure? How much is it? How much is it? 7,000 point multiplied by 2. Okay. Sorry, I can't see your comment in Facebook again. Okay? But never mind. Okay, let me take a look at YouTube. Okay? 7,000 multiplied by 2. Can you give me the figure? Thank you. 14,000. Thank you, OT Lee. Thank you, LTS Lim. Okay? And the reason why Nasdaq ever since February, okay, Ken, I just adjust it. Thank you. Okay? Ever since February, it reached 14,000 points. It has been in a sideways market. And upon reaching 14,000 points at the start of the year, it dropped to around 12,000. That's a 2,000 point drop. 2,000 point out of a 14,000 index is a drop of more than 10%, right? That's the reason why today you can see your Tesla has been dropping. Tesla is a tech stock. Ever since the start of the year in February, it has dropped from $900 to $600. One of my favorite stock is called Apple. Ever since February, from $145, it has dropped to today $127. It has not recovered ever since, right? What about, okay, NIO? Some of you like EV, right? Electric vehicle. From $67, it dropped half the price to $33. Yes, it recovered almost $10, but it's nowhere near the peak. Why? Because NASDAQ stands for technology stocks. So all the tech stocks, ever since the index doubled up, it has not recovered since. Okay, almost all, except some minor tech stocks. Okay, I would say some, there are of course rare occurrence like Facebook, which is near the all-time high. Okay, but I would say majority of the tech stock has not recovered near its January high. Okay. Okay, Netflix, January it reached almost $600. Today is below $500. Okay, one of my favorite tech stock has not recovered ever since January. Okay, so I want you to be forewarned. Okay, there are some sectors in America that has already collapsed, like technology growth stocks. But there are some sectors like banking stocks are at all-time high figures. Okay, so what happened is over the next few months, the reversal may happen. Those tech stocks that has dropped a lot, I want you to pay attention, because some tech stocks are found at 50% is peak value. There are some already dropped around 40, 30%. It's considered very cheap. So in the next few months, if the market really go into a correction, yes, the tech stock may drop, but it will be much more resilient than some other sectors. Okay, much more resilient than banking sectors. Okay, so the reversal might happen. The manufacturing sector, the energy sector, the banking sector stocks that has been very strong over the last few months may drop sharply, whereas the tech stocks are more resilient. So your job is to pay attention to those stocks that already dropped a lot. The reversal might happen. Okay. How about AMD and Intel? I really like AMD and Intel for a simple reason, because today we are in logistic problem, right? There won't be enough semicon chips over the next 2 years. That is mentioned by Intel CEO during the recent earnings results. Okay, so definitely in what we call semiconductor chips is rising. There will be a lack of supply. There will be huge demand. Okay, but once COVID is over, definitely the supply will be back up. Okay, and that means more earnings for them. There will be strong earnings coming out in the next 1 to 2 years. And furthermore, don't forget one thing. Over the last 1 year, because of COVID, all governments in the world slowed down in 5G infrastructure projects. 5G should be launched this year. Okay, in Singapore, in Europe, in US, it should be having a full rollout of 5G infrastructure. But today you can see Singtel is still not laying the 5G cables. They are still not building the satellite. Why? Because no manpower. Okay, our foreign workers, we are running out of labor. Okay, so all over the world we are facing such a shortage. Okay, in implementing 5G infrastructure. But I will say after this COVID is over, hopefully the vaccine is effective. If COVID is over, the cases go down, and if operation can resume, most likely in the next 2 years, all countries in the world will start to implement that 5G infrastructure. If they start to implement that 5G infrastructure, there's more need for high-tech semicon chips. That's when your self-driving cars will do a full rollout. Okay, so I would say I really like semiconductor companies now. So this is a sector that you need to pay attention to over the next few months. Okay, buy whenever there's a correction. Okay. What about NIO? Thank you, HK Lee. Okay. In fact, let me tell you something. I feel that NIO has already found itself a very strong technical support. Okay, if you look at the charts. Okay, NIO is one stock I'm really paying a close attention to, okay? So one of the way to buy a stock in the second year of a bull market, how do you know it has turned very cheap? If you want to know the answer, can you give me a tool sign, okay? So if you give me more tools, I'm willing to share with you, okay? So just give me a tool sign. In fact, new is what? One stock I want you to put inside your watch list today, okay? So just give me a tool sign, okay? I'm going to tell you the reason why. Thank you. Just give me a two sign. Now at least I can see your comments. Okay, thank you, OT Lee. Thank you, Benjamin. Okay, thank you so much. Okay. Thank you. Thank you for your share comments. Okay, you will receive our infrastructure stock recommendations over the next 1 week. Okay, I have done a digital report for you. So all you need to do is share this video today and comment the word shared. Okay. Thank you for your two. Thank you, Andre. Thank you, Yvonne. Thank you, Suchin Q. Okay, thank you so much. Okay, thank you in YouTube. Okay, Bugzilla. Okay, Vincent, David. Thank you so much. Okay, let me tell you something. Very easy. Very easy. Okay, all you need to do, just now I tell you the rule called the double up rule, right? The double up rule. Whenever the index went up double its value, there's bound to be a big correction coming out in the next few months. Right? That's called the double up rule. Okay, remember this rule? This rule applies to index, not for stock, not for stock. But now I want to tell you about one rule to buy cheap stocks whenever it drops, whenever it collapses. Okay, that's what we call the half rule. Can you please write down in the comment box? Okay, I'm really glad that now I can talk to you. Okay, so can you put down the comment half rule? I want you to remember this for the rest of your life. In a huge bull market, today we are still considered a bull market. Although I said there might be some correction, but it doesn't mean that there will be like a bear market crash. Okay, there will be more stimulus coming out, but we need to wait for a stop correction. Okay, so what happened is whenever there's a big correction, use the half rule to locate stocks that drop cheap. What do I mean by half rule? Take the highest point, $67. Can you do me a favor? $67 you divide by 2, right? What is the answer? What is the answer? Can you write down in the comment box? What's the answer? That's called the half rule. Okay. Thank you, Dan. Thank you, Alan. Thank you, Liang. Thank you, Xiu Hui. Okay, some of our old friends. Okay, thank you so much. Okay, and by the way, please share this video out to your loved ones. Okay, today you are actually learning something very, very practical. Okay, I would say in the next few months it will happen. Okay, please trust me. Okay, the double up rule will cause the stock market to drop, to correct, but of course some sectors will correct more than the other sectors. Okay, like what I said. So use the half rule to locate some of the cheap stocks today. 67 divided by 2 is how much? Please give me the answer. 33.5. And do you know what happened? This stock reached 33.5 that day. Okay, new. That day when it reached 33.5 a few weeks ago, that is the lowest point. That is the lowest point, 33.5. So honestly speaking, you don't need to be a scientist to be a good investor, right? You need to just understand some of the, what we call the rules to invest in stock market. You need to understand the whole landscape, the market, as well as some ways to find cheap stock to buy, right? So use the half rule. That's one very, very practical rule. 33.5 is the lowest point of NIO. So in the next few months, if, okay, of course now if you buy at 43, you are almost like 20% more expensive, right? Or 20 to 30% more expensive, okay? But if in the next few months, if this stock does correct back to somewhere around 33.5, you can easily buy in again, right? You can easily buy in again, okay? So don't be impatient. You need to wait for it to collapse back, right? Okay? Okay, I like this stock a lot. It's called Baidu. Okay, Baidu. Okay, Baidu is a very strong stock in the 5G arena. Okay, 5G arena, artificial intelligence industry. Okay, they manufacture some of the best robots in the world. Okay, artificial intelligence. Okay, so they spend a lot of money doing a lot of research. Once 5G has a full rollout, they can fully implement artificial intelligence. Okay, so this stock ever since February, like what I said, tech stock already crashed, right? Tech stock, because the index dropped 15%, a lot of stocks dropped 20, 30, some even drop 50%, okay? So all you need to do is take this figure, $350 divided by 2 is 175. 175 is the lowest point of this stock, okay? But of course, if you buy in today, it's somewhere near the 175, right? If you buy in today, make sure you have some sufficient money just in case the market correct in the next few months. You can buy somewhere below 175 again to average down, just in case, just in case, okay? But you're near the low point. This is what I mean. You're near the low point. And you know a bit of technical charting, okay? You can see this is a stock that is declining in the wave pattern, right? It's in a declining wave pattern, okay? So it's not going to go down too much anymore. The risk of buying this share is pretty low. It's pretty low, somewhere near to its half figure, okay? Of course, there are more stocks, okay? Today, we won't discuss too much, okay, into what are some tech stocks that has already dropped by half. A lot, okay? Go and look at Cathy Wood tech stocks, okay? You can find a lot of gems there, okay? So, anyway, let's come back, okay? So I want you to do this, okay? What should you do as an investor? Number one, the market will continue to either be number one, dead. So it has been dead over the last 1 month, right? Because people are worried. Wallstreet are not pushing the stock up anymore. They are waiting for figures to come out. They are waiting for the government stimulus measures. They are waiting for the concrete evidence that they are still going to print money. They are waiting for the figure of the inflation. They are waiting for the assurance that interest rate will not rise soon, right? Okay. And let me tell you, there are only two scenarios that will happen over the next few. Number one, S&P continue to lie here at around the double up figure. It won't go up too much anymore. Or the 10 to 15% that I tell you will happen in the next few months. So I would rather, if you ask me as an investor, I would rather have volatility in the stock market so that I can buy cheap, right? Okay, if Apple is still continuously lying at 120, 130, I wouldn't have the chance to make money, right? So I would rather have a big correction so that it wipes off all the fears of Wall Street. And let me tell you something. If in the next few months, if the index really drop 10 to 15%, like the Nasdaq dropped in January, if S&P and Dow Jones really drop 10 to 15%, what will happen is there won't be inflation fears anymore. Wall Street will not cause inflation, what we call pressure, will not cause pressure on government. And Federal Reserve don't need to increase interest rate. They can still come up with more stimulus measures. So what Congress is doing today is the Republican Party is saying that, you see, our crude oil is so expensive today. You see our semiconductor chip prices is increasing crazily. You see our inflation figure is now increasing crazily. You see our crude oil price has gone up to $70. We don't need to print the $2.3 trillion. They are fighting the Democrats in printing money. But if the stock market drop 15%, if they see that a lot of stock crash, if the stock drop 20 to 30%, now the Republican Party will not come out with any excuse not to print money, right? Okay, because the investors will blame them, US will blame them, Wall Street will blame them. Why don't you print money when the stock market collapses? Okay, so what I want to do is, hopefully in the next few months, you are going to see some correction. If not, the stock market will continuously be dead, okay? So the value of stocks need to drop so that the market do not have inflation worries and the government can continuously print money, which is what Democrats want to do today. Okay. Number three, if the stock market don't drop, what you will see is gold price will continuously rise. Okay. Buy some gold, accumulate some gold, and accumulate some bonds. They will continuously rise. Okay. And if you see gold price has been rising over the last few months from 1,700 today around 1,850 to 1,900 points. Okay, it will continuously rise. Okay. Number 4, I want you to do this. If there is a correction, make sure you know how to locate the bottom of the correction. Market timing is essential. Okay. Know how to locate the bottom of any correction. There are ways and means to do it. Okay, make sure you know how to do it. And number 5, know what are the cheap stocks to buy. Of course, just now I give you one big hint already, right? The cheap stocks that we're going to look at are the technology growth stocks that has crashed. Okay, a 50% drop in NIO is to me a crash. Okay, this is where the opportunity lies. Okay, a 50% drop in Baidu is to me a crash in that stock. It doesn't mean the whole market crashed, but that stock has crashed. Okay, it's giving you a very cheap discount. Okay. Okay, so good. Okay, so the last thing I want you to do, okay, today, of course, today I call for this meeting is to give you a brief presentation of what is going to happen over the next few months. Okay, so these are some major issues. There's a cause of concern. Okay, because inflation figures has caused the drop of crypto. It has caused the drop, the crash of Taiwan composite. And it will cause the crash of a lot of markets. Okay, I don't know whether it will cause US stock to crash, but chances are it may, because we are at the double up point. Okay, so if you are really interested to know more about stock investing, okay, what I'm going to do is I'm going to hold a physical class for you. Sorry, today time is really short. We only got like 1.5 hours for you. Okay, so in this class, I'm going to do this. I'm going to share with you more insights how to locate the bottom of any correction. So you are going to learn not only the half rule, not only the double up rule, okay, some of the rules in the stock market. You are going to learn about the 3 phases of a bull market cycle. At which phase should you buy which instrument? Okay, so how do you identify the bottom of a market in a correction? Okay, but bear in mind that this is a physical class. This is not going to be a so-called online class anymore. So this is a physical class whereby you can be in the classroom with me, you can ask questions, I can answer your question directly. Sorry, today I think at the beginning there's a lot of problems. That's what we call tech. Okay, I can't see some of your comments. So I sometimes like physical class because that's when we can answer your questions. Okay, you got any questions, you can just ask. Okay. Not only that, I'm going to share with you the stocks to look at, especially the tech stocks I already mentioned to you. What kind of tech stocks? Look at some of the semiconductor tech stocks, the 5G related tech stocks, okay, the chip tech stocks, so and so forth, okay? Know what are the kind of tech stocks to invest in the second half of this year. In the first half of this year, tech stock has been really lousy, right? It has almost like crashed, okay? But in the second half of this year, there will be some what we call sector rotation. Now, coming back to just now, some of the questions, okay? One participant asked, what are the major pillars of US economy? Okay, so there are 4 major sectors that you need to look at for sector rotation play. Number 1 is what we call the healthcare sector. Okay, healthcare is one big sector in US. The second is energy sector. The third is tech sector, which already collapsed in the first half of this year. And the last is the finance sector, which haven't dropped yet. Okay. So my guess is finance will be going to be weak in the next half of the year. Healthcare has not really rise a lot. So 2 major leading sectors that may lead the market in the second half will be tech and healthcare. Energy has been very strong. There's chance of crude oil collapsing 20% in the second half of this year. So don't buy any energy stocks now. Don't buy any finance stocks now. You should do some profit taking. Okay. So I'm going to tell you what is sector rotation play and what are the kind of stocks to look at, okay, in this physical class. How to build your retirement portfolio if you want, okay. A retirement portfolio hopefully is diversified, okay. The 3 traits of a successful investor. I'm going to identify some of the traits to tell you what are the 3 ingredients of success to be a consistent successful investor, okay. And how do you execute monthly trades to make monthly income? All you need to do, but by the way, this class is a physical class. and today we are still in what we call a COVID stage. Okay, although the good news is lockdown will be over in Singapore 1 week later. Okay, but because it's a physical class, okay, we want to restrict the amount, the number to 20 packs. Okay, so what you need to do, we only got these seats, okay, available, 20 seats. Okay, today if you want to learn more from me, all you need to do is sign up. Go to this link. Okay, click on this link to sign up, and hopefully you're one of the 20. Okay, so that's all for today. That's all for today. Let me see whether you have any more questions. Okay, yeah, buy gold. In fact, today gold price has dropped. Okay, gold price has dropped. Anytime it drop, I would say you can start to accumulate a bit of gold. Okay. Wait, sorry, gold price has not dropped. In fact, it has recovered strongly. Okay, let me take a look at gold price now. Wow. Oh, sorry, this is not gold. This is Dow Jones. Okay, this is gold futures price. It has recovered very strongly. Very strongly. Okay, so I think after the inflation figures is out, gold price has risen to almost 1,900 points. Okay, so I guess gold price will continuously be strong over the next 6 months. Okay, if there is a market correction, gold price may go up to around 2,000 points. Okay, in fact, my ultimate resistance of gold this year is somewhere around 2,000 points. Okay, so it has gone up from 1,700. I've mentioned about buying gold at around 1,700. Today it has climbed almost 1,900 to 1,009 now, right? So this is the gold price today. So if some of you have been following our Facebook videos, okay, our YouTube videos, indeed I asked a lot of our audience to buy gold somewhere around there. Okay, around 1,700. That's the bottom. That's the bottom of gold this year. Okay, and today it has risen to almost 1,009, a 200-point rise in the futures. Okay, in the futures you make a lot of money, a lot of money. Gold will continuously be an inflation hedge over the next 6 months. Can you imagine the PPI figure get worse? Can you imagine the CCI figure get worse? And I don't feel that the PPI figure is going to go down. I don't feel that. Okay, it might breach even the 1% mark. Okay. The producer price index. Okay, so gold is an inflation hedge, is a hedge against interest rate rise. Okay, so I would expect gold to climb up to even all-time high figure of around 2001 over the next few years. Okay, but the resistance, the target figure I'm aiming for is somewhere around there. Okay, around 2,000 point. So if you buy at 1,700, you have made already a 200-point profit, right? So all you need to do is take some profit off the table, okay, and let the rest run. Okay, so yeah, let me see what about Nvidia. Okay, so today I really don't have a chance to talk a lot about stocks. Okay, so what I will do is I will leave it to the stock investing class. I will brief you on some of the stocks to look at in the class, but of course we do only have 20 seats available. Okay, but Nvidia is really one of the stock that you can look at if you are targeting the 5G industry. Okay, 5G industry. But having said that, Nvidia has gone up crazily because of share split. Okay. If some of you know there's a share split coming up soon, 20th of July, it has gone up crazily from $550 to around $700. Okay. In fact, I told some of my students to buy Nvidia during the announcement of the share split. It has climbed up crazily 200, almost like 200 points in the span of 2 weeks ever since the announcement. Okay, so over the next few months, continuously there might be some stocks that are really expensive that might want to declare a share split. Okay, share split is a good announcement that Wall Street like. Okay, good corporate announcement that Wall Street like. Okay, so it's also one of the strategy that you can put in your arsenal. Okay, so yeah, Nvidia is really expensive. I don't suggest you to buy these tech stocks now. Definitely not. But in the midst of correction, you may want to look at this stock over a long-term horizon because it's in the industry of 5G. Okay, and it's today the largest market cap in the semicon industry. It's the largest market cap. It's even more than Intel. surpass Intel market cap. Okay. So yeah, it's one of the good stock. Okay. Okay. Thank you so much for today's session. I'm going to call it a day. Today my job is to, because a lot of people send me messages, Daniel, what do you think of inflation? Why is it people are worried about inflation figures? And today there's a lot of news that came out. Okay, if you look at, okay, yeah, some of the news, okay, people are worried about inflation figures, interest rate rise, what is happening, why my tech stock never run, why Cathy Wood tech stock dropped 50%, why the index of Cathy Wood ARKK dropped almost 20-30% when it should be a very good ETF, right? Okay, so one of the major reasons is because of all these fears by Wall Street, okay, and they are targeting those that already rise a lot, okay, and one leading sector is definitely tech, okay? But having said that, because of the huge drop in tech stocks, it's time to look at it again second half of the year, okay? So my job is done today. Hope in future I will brief you more. Sorry, there's some technical issues at the start, okay? So I'm not used to talking on my own without seeing your comments, okay? So there's a bit of karang kabut, okay? So in future, hopefully there won't be any tech problems, okay? So hopefully I can bring you more value. I can brief you more about the outlook. But hopefully in the next 6 months, okay, what I really wish is you can really buy stocks at the cheap, okay? And I foresee that some industry has already dropped. There will be tremendous opportunity, okay? So hopefully in the next few weeks, I'm going to give you more videos, okay? I'm going to share with you more education. So hopefully you share our video out. Do like the Facebook page, do like our YouTube page, okay? Thank you very much, okay? See you again. Stay safe, stay healthy, and hopefully this COVID lockdown is over. Thank you so much, okay? So that's all for today. If some of you want to come to our physical class, I don't know whether is it up, just sign up for this physical class. Then if you want our top 3 infrastructure stocks, the digital report, the free digital reports, okay? So I really spend a lot of time, okay, coming out with the digital report. I will list down some of the infrastructure stocks that are very good in the next few years, okay? So if they really go through that stimulus package, definitely these are some of the stocks that you can look at, okay? So all you need to do is do these 4 steps, share this video out to your friends, and comment or share in the post, okay? Thank you very much. See you again. See you the next time around. Bye-bye.